What's up everyone, it's Caddy with MoneyVest. So in this video, we are going to be talking about one stock that is now selling off a little bit more aggressively. So it traded back up to all-time highs. This is a company that we were talking about back when it was trading in the low 100s. And it more than doubled in a very, very short period of time. I do believe that this is a stock that is on its way up to almost $1 trillion in market cap over the long term. We're talking at least 5+ years out because of the fact that they've got a very, very significant moat and a lot of dominance in this particular part of the semiconductor industry. So this is a company that's worth over $200 billion and going, basically 5x from here over the next, let's say 10+ years out, if not 5 years, is very much a possibility for this company. And I've talked about this before at low 100s when it was a very, very good deal. And now it's trading at just under $196, so a little bit over $200 a share. So always, if you enjoy this video, find it helpful, make sure that you drop a like and also subscribe to the channel if you're just joining us for the first time. And also, I do want to remind everyone that we do have the MoneyVest beta launch happening on July 8th. We'd love to have you on board so you can join with that huge special price and that 51% discount that's available for a limited time, and you will have access to the entire platform. And yes, the company we're talking about today is going to be Qualcomm. Now, Qualcomm is a stock that, again, belongs to the semiconductor sector, but mostly focuses on the 3G, 4G, 5G, and IoT, and a lot of other QTL, which is Qualcomm Technology Licensing, and more importantly, Qualcomm Strategic Initiatives and Qualcomm's commercial, again, technology, CDMA technologies that offer, significant advantage to, it's a chip designer, so significant advantage and moat that it has, based out of San Diego, of course, over 50,000 employees. So this is a company that we've talked about, again, back when it was trading at low 100s, and it's rallied quite aggressively to well over $230 a share. And that was a, rally over 122%. It's now starting to roll over a little bit, down over 2.5% on the day today, of course, selling off over 14, almost 15% from its all-time highs. So we're going to do a full analysis on this. The M score is going to be at 3.43, which again is not terrible, but I think it's more to do with valuation than anything else. So if you come over to the MoneyVest metrics, again, you can get the early access for this platform. And the last 7 years, the CAGR for the revenue has been a little bit over 6%. Gross profit growing by almost 5%, operating income up by 4%, net income's up 3.4%, so it's been a little bit more stable. So it scores about a 3.33 out of 5 on the growth aspect. You can also plot a lot of really visual charts. So again, you can plot everything that you want to, EBITDA, including free cash flows. So this right here is the overall trend for the company. Revenue coming down from 2022 from $44 to $35 billion. So if you want to double check this data, you can come over here and go over to the annual data. You can see $44 billion coming down to $35 billion, and net income going from almost $13 billion down to $7.2 billion. So net income essentially over here going from 12.9 to down to $7.2 billion, so a little bit of a decline there. And then margins, gross margins have been compressing a little bit from 56% down to 55.7, so just a small compression here. Average has been 15.6.5. Operating margins have increased. Net margins have also expanded from 10.9 to over 20%. So they've obviously gone up quite significantly, although in the last year they have, of course, come down from highs of well over 33 and 29, almost 30%, down to a now more stable 20 to 24%. But gross margins have been more or less stable at well over 55% for the business. When it comes to some of the efficiency, 2.8 out of 5 here, because the stock-based compensation tends to be very, very high. So we're looking at, a 2023 number well over 22% for this company, so very, very high. It is efficient on the return on invested capital and return on capital employed. Return on assets and return on equity has been somewhat reasonable, but of course 2023 number is 33.5%, which is efficient, but compared to its average negative 33.72% because of the big change in 2018 for this company. So if I come over to the 5-year data, the return on equity, you'll notice the average has been 74%, 2023, 33.5%. So again, highly efficient for that business as well. When it comes to the financial table, we've got cash, which is coming down. So it's worsening because it's coming down, by 0.9% every year. And debt's also coming down, but a little bit faster rate, a 1.25%. That's why it's decreasing at a much faster rate than the cash is going down. Net debt is positive, so the company does have more debt than cash on the balance sheet. So if I remove everything, this right here is the current net debt situation for the company. So it's gone from 7.8 billion down to 2.8 billion. So that's good that it's coming down, but the company still does have more debt on the balance sheet than it has cash. Cash was 2022 7.6 billion, 2023 we're sitting at a little bit over 12.5 billion. So that position has improved quite significantly. Cash has increased year over year. That's been more or less flat, so the net debt has obviously gone down, but nonetheless, it's still a positive number for the business. And finally, coming over to the valuation. So 2023, you'll notice it's trading at around 22.3 here. For the PE multiple, price to sales a little bit over 4.5. So valuation wise, I would say it is more or less okay. I mean, it was much higher back in 2020, but of course, even after the price going up, earnings have increased from those levels, and as a result, we've seen the price to earnings multiple come down to 22. Price to sales a little bit over 4.5, slightly higher than the 2022 number, now sitting at, if you come over to fundamental analysis and if you come over to ratios, we're now sitting at price to sales of about 6.28 and a forward basis of 5.74. Price to earnings trailing 12 months 27, forward we're just trading at sub 20. So sub 20 is actually not bad for the company. Qualcomm's 5-year average is about 16.8 and a trailing price to earnings of average is about 35. So a huge difference there. And then if you come over to some of the other metrics such as the price to free cash flow, looking at 18.6 on a trailing basis, free cash flow yield of 5.36%, and price to operating cash flow about 17.2 on a trailing basis as well. Finally, coming over to the analyst estimates, we got a buy rating with a high target of 257, low target of 133, and an average target of about 196, very similar to where the price is trading at the moment, with a CAGR of about 16.4% on a 5-year basis for the company. Earnings going from 642 all the way up to 1373 for the business. So if you come over to the Analyzer tab, if you go over to discounted earnings model, and if you apply, let's say, a 14% growth rate and a expected P multiple of, let's say, 18, a little bit higher than what the last 5-year average has been. Share dilution has been very, very strong. In fact, that's something that I didn't go over, which Qualcomm is doing really well. So if I go over to the last 5 years, you'll notice that they've got excellent share buyback. So it's gone from about 1.2 billion down to 1.126 billion. And I'm assuming 2018 was even more shares. Like in other words, 2018, we were looking at 1.4 billion. It's gone down to 1.12 billion. So that's a very, very strong share buyback of about 4%. So coming back over to the Analyzer and discounted earnings multiple model, autofill, we're going to analyze for 5 years. We're going to apply a 14% growth rate with a P multiple of about 18. Keeping everything else the same, we hit calculate, and the fair value is sitting at $148 a share, which is 26% lower than where the price is trading at the moment of just over $202. Of course, market price is even lower at $196. So this right here is going to be that sensitivity grid. So you can take a look at, okay, based on, your different multiples, based on different growth rates, where the actual intrinsic value would be for this company, for Qualcomm. So keeping that in mind, again, 20 times earnings multiple and a 16% growth rate would put us roughly around $180. So in and around somewhere between 150 and 180s would make for, in my opinion, a good deal for Qualcomm. And this right here is the entire technical analysis, where 176 is going to be that previous resistance acting as a new support moving forward. But we've also got this higher low for Qualcomm that it's coming down to. So again, the price is coming down, RSI, MACD, the L3 banker oscillator, everything's been rolling over a little bit, and that is going to be that next support level to watch for Qualcomm, all the way down to 156, down to as low as 137 for the business. But in my opinion, I think 150s is going to present a very good opportunity. So I'm kind of updating my fair value from low 100s about a year and a half ago to now in the 150s for this company. So hope you all enjoyed this video and a complete update on the markets, on the stock here, and let me know your thoughts down in the comment section below. And again, this is going to really streamline the entire process of analyzing stocks very, very quickly. You can quickly visualize a lot of really interesting stuff, a lot of really things that that are important to you. You can switch between quarterly versus annual data, 10 years, 7 years, 3 years, 5 years, whatever you want to look at. You can quickly switch around, and again, you can add a lot of really cool things, whatever you want to: free cash flows, total cash, revenue, profit, gross profit, a lot of different financial statement items, and of course look at analyst estimates, ratios. And again, we're going to be adding more and more stuff over time to this platform so that it becomes more and more useful and more functional for all of you. So thank you so much for joining. Link's going to be down below. We'd love to have you on board. As always, happy investing. I'll see you all in the next video.